JB Cycles with an update on December the 18th. So, is the bear market rally over? Here I have the S&P weekly data, and I have the 21-month offset band that we have been struggling with recently. Also we have the 42-month average. So both these, a break below these would suggest a hard landing. So a soft landing, we would find support at this level and rally. But in a hard landing scenario, we will finally break these supports and go down lower. And that's what my scenario is pointing to. We had an A move down, and now we are in a sideways B move, and then we are looking for a capitulation C going down, and it suggests a low around March, April. But looking into some analogs, we see we could go down further than that. Also another very similar scenario, A down, a sideways B. This B has an ABC shape, and we should look for a capitulation down into March, April. But looking into analogs, we could go down into the summer or fall. So let's have a look at so in green I have the average of medium long duration bear markets. They are about 270 calendar days, and in blue I have the average of very long bear markets. And so we were here in the position where did we have a medium long bear market and now we have started a new bull market, or is this just on the edge of the cliff before we get the capitulation move and the bottom formation? So the average of these long bear markets suggests a low around the summer. Looking at let's see, so I have my 7-year cycle in red here, suggesting a series of down legs into, well, normally we should look for a low around February, March, or even July, August. As we see, we have been struggling with the 200-day moving average. We have been up into what I have called the pain area for bears, but now we are starting to break down. So this maybe we are into a new down leg into lower lows here now. We have in gray I have the 80-week offset. We have been below this one, failed to break above. Also I've been looking at the 90-week offset, and here this is more like the 21-month offset I showed in the beginning. Here we have been struggling with this offset, and we were above for a while in this pain area, but now we are starting to break down below. So looking at bear market rallies, here I have the average of bear market rallies in light blue and the current situation in red, and we see the duration of this bear market rally was about average. And in blue here I have compared the previous bear market rally up from the summer low, and we see it's very similar. Also in green here I have a bull market rally up from the 2016 low. Anyway, this suggests a downturn here, the down leg. Looking at this previous one in blue, we see it made a kind of a early low. I did expect some kind of a low in October, but a final low in November, but we didn't get that. So let's have a look at down legs after bear market rally. So current situation in red, and we have the previous one in black. I talked about the previous one had a low around October the 10th, and from seasonality, the market loves to rally from a low around October the 10th. Normally, from the average here, from the scenario, I was kind of looking for some kind of a low around October the 10th, but the final low in November. So from the current situation here, we are in red. This band, this average, is suggesting some kind of a low around end of January, but we should have a bounce and a final low perhaps around the end of February. So could, if this is what we are, if this is what to come, perhaps market would try to make a double low, that we fall down to the September, October lows here in the end of January, trying to make a double low but fail, and we get a lower low and some kind of a capitulation in February, March. The previous down leg ending in October, at that point I had forgotten to track the 80 trading day cycle, and now I'm watching that one more carefully, because in red, the 16-week cycle, it had a low in October, and now it has the next low around end of January. However, we should also notice the 10-week cycle has a low a bit later, so that could push the low into February sometime. Also, I have you see the 10-week cycle has a top around New Year, so we should look for some kind of a bounce here in the end of December, starting perhaps next week or around Christmas. So some kind of a bounce around New Year, but we should go down into a lower low. And here I have the offset of the 16-week cycle, one offset and two offsets, and we should stay below these offsets and generally be in a downtrend into February sometime. But some kind of a bounce here on the way down we should be looking for. Also, this is Norway, and for S&P it looks very similar. Here I have call it a wave count with the basis on the 16-week cycle, and we see two of these 16-week cycles make up nominal 40-week cycle in black, and then again two of these black make up a green 18-month nominal cycle, and three of these green ones make up a 54-month nominal cycle. We see this works rather well for Norway and similar for the S&P. We have some irregular patterns. We had here a very short 18-month cycle. Here we had Draghi saying whatever it takes, that stopped the possible downtrend and bear market here. And in here in 2018 we have a long 40-week cycle. Currently this suggests a 40-week cycle low around May, and the final bear market low in around the end of 2023 next year. However, that would be a very late low from the 7-year cycle. So I think we could see some kind of irregular patterns here. We could have the final low in the spring, early summer, or perhaps late in the summer. So we'll see how this exactly will play out. But looks like the bear market is still alive, and we should be going down into lower lows in the winter. See you in the next one.